Good afternoon, Portland metro area here in chilly Oregon this afternoon. I'm Jennifer Timm. I am a Keller Williams agent and I am a real estate wealth advisor licensed in both Oregon and in California. And it is my honor to be back and sharing with you our midweek market brief for the Portland metro area. And this is where smart money watches the market. So let's move right into our national outlook. Our key market trends and headlines. Mortgage rates dipped to 3-year lows. We've seen it down to, we actually saw it below 6%. Our kind of average at the moment is we're seeing around about 6.06%. It did change a little bit today. So I'll tell you what our today rates are a little bit later. So this drop is fueling a wave of activity. Refinance applications are up 40% year over year. Purchase applications are up 16% month over month. So the market is prepping for a strong spring buying season. So buyers don't delay, get in the game. Inflation eases, but housing is still sticky. So the core CPI was up to just 2.6% year over year, lower than expected. Shelter or housing inflation remains one of the biggest contributors. The Fed, therefore, is unlikely to cut rates. And we're talking about the Fed rates, which do not directly translate into mortgage rates. But they're not expected to make any cuts before March or later. Home sales surge because buyers are back in the game. So existing home sales up 5.1% in December. New home sales, October data, which is the most recent, is at 3-year highs. Median home price is flat at $405,400. Buyer activity is rebounding. MBS Highway Housing Index rose 7 points in January. Buyer activity and sentiment are noticeably improving. So again, buyers get into action sooner rather than later before even more buyers come in for the limited inventory and create huge competition. Rent compression continues. Median national rent of $1,689 is down 0.7% year over year. Rents are falling most in high-end units, while lower-end rent affordability remains tight. This represents 29 straight months of year-over-year rent declines. So there's a lot of headlines. Trump has come out with all sorts of policy suggestions. I'm just presenting the information here. A lot of these headlines do not have a lot of clarity. So we'll go through these three, and one of them was just announced today. So executive order ban on institutional home buyers targets large investors in single-family home purchases, exceptions for build-to-rent communities. Enforcement details and the definition of institutional investor is still very unclear. Economists doubt it will solve affordability due to the small market share of large investors. And again, people are currently renting those, so we'd have to find a solution for those folks. Proposed GSE action, Fannie and Freddie to buy $200 billion in mortgage bonds meant to support liquidity and lower rates, but it's too early to tell impact on actual affordability. And depreciation for homeowners. This was something that Trump mentioned today in a speech. Trump floated a possible depreciation tax break for primary residents, and this is currently only available to investors. Could open new incentive for home ownership if passed, but again, no details currently available. We'll just keep an eye on everything, and the experts out there will give us the pros and cons of everything, but until there's more details, there really isn't much to look at. Very important to understand that we do have a generational wealth transfer which is reshaping the market. Gen X and millennials are set to inherit $4.6 trillion in global real estate. 52% of that will be US-based. But younger buyers are prioritizing lifestyle, function, and value. They don't necessarily want to keep the properties that are being left to them by whoever, mom, dad, aunts, uncles, etc. Surge in activity in new luxury markets like Nashville, San Diego, and Salt Lake City. And nest investing is a growing trend, using real estate as a wealth anchor. Now, as a real estate wealth advisor, we specialize in helping families grow, protect, and transfer generational wealth while really helping you to understand some of the options available to defer or eliminate taxes. And so we are absolutely a resource. This is what we're working on all day, every day. And it would be our honor to assist you if you are on the side of you own these properties and you're looking to make sure that your plans are in place to do that transfer the best way possible to your loved ones. And then for those who are inheriting, we understand that not everybody wants to keep the property, especially if it's in an area that you do not choose to keep it for investment purposes or for actually living in it. So we would be honored to assist you with your goals of perhaps liquidating that property and purchasing or finding something that better suits your needs. Additional market context. This is a really important one. The mortgage lock-in is easing. So what that means is more homeowners now have mortgage rates above 6% than below 3%, potentially unlocking inventory in 2026. Because that lock-in effect was definitely a barrier to sellers selling a home with a super low interest rate, understanding that they, in many cases, were going to be doubling or more than doubling their new mortgage payments. So that is just starting to switch around. So we'll see how that develops. Pending sales and buyer demand are trending up across most U.S. regions, and renters and high-end units are staying put, creating a drag on move-up markets. Our mortgage rate watch, so as I said, we mentioned the 6.06%. That's kind of an average we've seen recently. This is today's rate as of this afternoon, published by Mortgage News Daily. And it really mirrors what's been going on in the markets as a whole. So the headline is mortgage rates sideways to slightly lower. So markets held more sideways overnight as traders awaited further geopolitical developments today surrounding Greenland. Both stocks and bonds lost ground yesterday on the threat of additional tariffs and counter tariffs, as well as decreased participation in the U.S. bond market from foreign wealth funds. When bonds lose ground, rates move higher. Bond market improvement was tentative earlier in the day, but more noticeable in the afternoon when Trump announced the framework of a deal just after 2:30 p.m. Both stocks and bonds rallied on the news, and up until that point, mortgage rates were holding right in line with yesterday's latest levels, but some lenders are offering midday improvements this afternoon. So 30-year fix, 6.2%, 15-year fix, 5.76%, jumbos, excuse me, at 6.38%. And then, of course, we've got FHA and VA that are 5.88 and 5.89. Of course, it really depends on what your local lender can offer you based on your credit scores, your credit situation. Our smart money insight at the national level. Affordability isn't just about price, it's about access and alignment. With mortgage rates at their lowest in 3 years and buyer sentiment improving, 2026 presents a strategic entry window for home buyers, investors, and move-up sellers. But don't wait for clarity on policies. Housing is a long game. Again, there's going to be lots of headlines, lots of suggestions, lots of economists analyzing everything. Today is a great day to buy the right piece of real estate. That's bottom line. Whether you're planning to buy, sell, hold, or inherit, partnering with a real estate wealth advisor ensures you're playing offense, not just defense. Let's review your equity goals and strategy, especially before policies shift again. So DM me, or I'll give my contact information at the end. Let's set up a strategy session sooner rather than later. Rates are not going to come down. All the projections at the moment are sitting in that, 5.7 something range up to the 6.25 range for the year. while we have the debt, the national debt that we have, and other factors, we're just not going to see rates coming down. So if you're waiting for the rates to drop, you're actually going to end up paying more for homes, because the supply and demand, we're just going to have more buyers entering the market, and that's going to push up home prices because we don't have enough inventory for everyone. Our local market spotlight, Portland, a unchanged sellers market action index, and still a slight sellers advantage at 39. Median list prices down slightly, 625,000. Price per square foot is up 317. Inventory is up slightly, 972 homes. Our median days on market unchanged at 98. Smart Money Insight. Despite a slight dip in the market action index, Portland is still favoring sellers due to low inventory. Smart buyers can use current pricing stasis to negotiate before activity ticks up again. Now is the best time to buy the right piece of real estate because the market is it is speeding up, and it's going to heat up. Lake Oswego, slight sellers advantage unchanged at 34. Median list price of just below 1.5 million, which is up slightly. Price per square foot up slightly, 491. Inventory is down, and our median days on market is up slightly. So with consistently rising MAI and low inventory, Lake Oswego remains a solid luxury market. Smart Money watches for a pricing breakout, strong potential for appreciation. And Beaverton, slight seller's advantage of 42, which is up. Median list price of 629,500, which is up. Price per square foot down to 292. Inventory up to 199 homes, and median days on market is coming down. It's at 77. So Beaverton continues to gain momentum with high demand and a rising MAI. Early movers may benefit from price appreciation in the coming months. Gives you that almost instant equity. So our neighborhood deep dives, watch your social media feed for market data of some of the other areas that we cover. In our global perspective, I've kept it the same as last week. It's just that reminder, and I spoke to an economist yesterday who echoed the same thing. We are starting to see more international interest and buyers returning to the US market because they do eye it as a great long-term wealth vehicle. So just know that that competition for the right kind of properties that attract international buyers and investors, you're going to be competing against domestic markets and domestic buyers as well as international buyers. So again, if you are thinking of acquiring or liquidating any assets, whether they are here domestically or overseas, definitely reach out. I would be honored to include a global perspective to your real estate plan. And talk about planning, that is still our wealth building insight. It truly is a vehicle to grow wealth. We were talking with the economists who are saying, what should you do if inflation goes up? Buy real estate. What should you do if inflation goes down? It was buy real estate. So it's always a good time to buy the right piece of real estate. And I would be so honored to assist you with developing a plan to help you grow, protect, and transfer generational wealth. It's all about sitting down and doing a strategy session, which of course is complimentary, no pressure whatsoever. It's just helping you articulate what your objectives are, sharing what the options are that are available to achieve them, and assisting you achieve those goals within your budget and according to your timeline. So let's connect. These are the best ways of reaching me. And just a quick disclaimer again, this material is provided for general information purposes only. This is not investment, tax, or legal advice. We do obtain our information from very credible sources, all of it. is sourced today, the day, so Wednesday, the 21st of January, to give you the latest, greatest information. And I actually waited to pull the information because we knew that Trump was going to put forward some ideas on policy regarding real estate in a speech today. So I was waiting for that information to come through. Past performance of any market results is no assurance of future performance. You should always consult your own legal, financial, or tax advisor and verify all information. Before you take any action, we actually work together with your financial and legal team, and together we come up with strategies to help you achieve your goals. And with that, I want to thank you once again for listening in and watching. If you have any questions whatsoever, please don't ever hesitate to reach out and contact me any which way. And if you know of anybody else who would find this information helpful, please share this opportunity with them. And with that, I wish you a warm Wednesday evening. It's a little chilly for me out there. And I look forward to seeing you next week at the same time.